Hi, everybody. July 7th, the market update desk with Scott Riley, NMLS 157524. I hope everybody had a fantastic 4th of July. The extended weekend felt like Saturday for about 3 straight days. So, wanted to go over what happened not only on Friday, but more in depth breakdown of numbers from the BLS report. Also, with the information that we're seeing from the One Big Beautiful Bill passage and an interview with Scott Bessent this morning, Treasury Secretary. So we saw the BLS jobs report show a very curious increase of 147,000 jobs on Friday. Now, that was definitely a beat from the original expectations of 110,000. In addition, we saw a slight upward revision, which we haven't seen for many, many months, an upward revision, and that was 16,000 jobs from the previous 2 months. The report definitely is a contradiction to the ADP report, which showed a negative 33,000 job losses. So there were, when we break down this report, we see there were 74,000 private sector jobs. Now that's one of the weakest reports we've seen in an extended period of time for private sector jobs. But it was outsized and outdone magically by some creative math, it looks like, by 73,000 government jobs that were added. Now, of those 73,000, they're reporting 63,000 were education at the state and local level. Now, we have kind of a question here because we're in June when school's normally out for summer, and somehow we're adding significantly more teacher and education jobs when normally we don't see those start to roll in until August, possibly September for the August report. They did a seasonal adjustment of 605,000 to get that number. To give you an idea, the non-seasonal, the raw number was minus 542,000. So that's a differential of those 63,000 local and state education jobs, a 605,000 seasonal adjustment. The math doesn't add up again from the BLS. Now, also, we saw the birth death model didn't do too much this month, except a little bit in the totality. So, added the birth death model, which tries to forecast beginning and ends of businesses, showed an increase of 24,000. But that's in comparison to the ADP, which showed minus 47,000. So that's upwards of 70,000 job spread there. That's where a lot of the quote jobs actually were computed in too. Now, the average earnings for the report showed an increase of 2/10, which is 1/10 beneath estimates, and reduced year over year average hourly earnings down from 3.9 to 3.7%. Average hours worked also decreased by 1/10 to 34.2. Now, when we talk about unemployment, we're seeing the household within that comes from the household survey. Above what I talked about was the headline. So the household showed 93,000 jobs created. But since 130,000 people left the labor force and are no longer counted within the U3 unemployment, that actually showed a decrease from 4.3 to 4.1%. So definitely within those numbers, there's a lot of questions, a lot of moving parts that are unanswered when you see these gigantic seasonal adjustments and very odd numbers to make this work. So there's the BLS shows very unscientific methods to get the numbers they're doing, and it adds questions to the viability of this data. The other big piece we saw this weekend was the passage of the One Big Beautiful Bill, the OBBA, as the acronym is. That was passed, and the question is how is it going to impact mortgage rates? So far, the bond market's been taking it in stride, but there are definite concerns over potential increases in the debt level and in the amount that we're going to need to sell potentially in treasuries to fund things. There were some extensions and increases in tax deductions specifically for real estate. They made permanent the mortgage insurance deduction subject to income limits. Also, we're seeing in the bill permanent 750,000 cap on mortgage interest deduction. Now they extended the SALT deduction, the state and local tax deduction, from 10,000 to 40,000, but only temporarily until 2029 when it starts to phase down for incomes over $500,000. Now, on CNBC this morning, we did watch an interview with Treasury Secretary Bessent. Spoke this morning about some of the interesting comments or things that are going on. Discussed the One Big Beautiful Bill, where he said the growth will come from, that the growth that will come will be key. It's true that the debt level is increasing, but if growth surpasses the current estimates, because it's important to note the CBO does not calculate growth, only the costs, only the debt structure. It could cause the total debt to GDP ratio to fall, which would be very important to the bond market. And he also explained the deregulation, which we've been talking about for banks so they can purchase more treasuries, could also spur and increase growth. Another point Bessent brought up is the fact that without the passage, we would likely have seen growth fall in a potential reason, which would have made the GDP ratio go even higher. Now, poly markets, which is the betting market for the rate market for the Feds, saw a decrease in odds for a July decrease go from 66% to 20%. So pretty much any cut in July is off the table, realistically. On tariffs, Bessent said that if things move along with negotiations, many countries will see their tariffs jump back to the April 2 levels on August 1. He also explained that there are several trade negotiations going on right now, and we may see a string of them in the next 48 hours, which the bond market probably will see as a positive factor. He was also asked, coincidentally, about being the next Fed chair, which he passed on and only said he'll do whatever President Trump is asking him to do. A factor that came out in a report that could help inflation is the OPEC Plus meeting resulted in a proposal and a commitment from them to increase production by 500 million barrels per day. That's more than 100,000 more than the market was expecting, and definitely could help inflation with reducing energy costs. This week's a little slower on total reports. Tuesday, we get the National Federation of Independent Businesses, small business optimism. Wednesday, mortgage applications in a very important 10-year auction, along with trailing Fed minutes. Thursday, jobless claims and a 30-year bond auction. We'll keep up to date, give you the information. We're on call as normal, 616-293-2189. The Market Update Desk is your original singular market news source for West Michigan. Take care. Have a great day.